All right, thanks everyone. I think this goes hand in hand. We talked about the Bitcoin on-chain space, and now we're bringing up, three of the biggest players to talk more about it. Maybe we'll just go, around the horn here and do some quick intros.
Yeah.
Sure. Oh, go ahead. No, please. Okay, thank you. So I'm Paul. I'm co-founder and CEO of Morpho, and so we basically build lending and borrowing infrastructure for people to come on chain and on one end earn yield, and on the other hand get some financing. And has been extensively mentioned. Thank you. As like the Coinbase backend for lending and borrowing. So if you earn yield on Coinbase, it's likely powered by Morpho. If you take some loans on Coinbase, it's likely powered by Morpho. But it's not just Coinbase. We work with Kraken, Gemini, Crypto.com, Binance, OKX, like every single exchange, and now fintechs as well. And with Morpho comes like a suite of asset management that allows like players like Bitwise and a bunch of other asset managers to come in and issue loans or manage assets and provide savings accounts that are non-custodial and fully on-chain for all the stablecoins that are on-chain today. So yeah.
What's up, everyone? It's great to be with you all. I'm loving this conference. So nice to meet so many people and also everyone on this panel. Bitwise has been around for 8 years now. I feel ancient. I'm sure some of you in this room have been around for that amount of time. Bitwise manages about $15 billion, best known for ETFs in the US, ETPs in Europe. We also manage option strategies to generate income. We're one of the largest providers of staking services and now vaults, which we're incredibly excited about. So we just help investors participate in the opportunity set that is right for them and most interesting for them.
Thanks. Justin Brill, Chief Revenue Officer at Anchorage Digital. We've also been around for 8 years, so in some good company. The first federally chartered crypto bank, and really honored to have everyone else on this stage as a client. We've been building institutional solutions and increasingly more infrastructure for the past almost decade here, and started with custody and now has expanded to a full prime brokerage style offering with all of the bits and pieces I'm sure we'll talk more about that make us a true bank and hopefully as close to a one-on-one partner for many in this room.
Awesome. So one place I want to start, we don't have to spend too much time on it because it's not totally relevant to the topic, but I just, I think it's cool. Bitwise and Anchorage, two of the most storied institutions I think in all of crypto have been, around forever. And Paul and the Morpho team, maybe the biggest underdog that crypto has seen. Yeah, exactly.
Let's go.
But talk to me a little bit about like the history of how this all came to be. I mean, like you said, Hunter described himself as ancient. Some would say seasoned, maybe a better term. But can you talk to me about the kind of progression of the company throughout history, how this all came to be? Because certainly, a lot went into this. Right? Obviously, everybody knows the brand names here on stage, but this is many, many years in the making.
Okay. Yeah. Has anyone read the book A Piece of the Action? Okay, this is my new favorite book. I'm not through it yet, so I can't formally recommend it, but I guess I would just start by saying in 1950 in America, people just put their savings in checking accounts and savings accounts. That was it. There was no money market funds, there were no mutual funds, there were no ETFs, there were no financial advisors, there were no brokerage accounts. You made money, you put it in a savings account with a bank. And over the last 70 years, all the things I mentioned have been introduced. The credit card was introduced. When the credit card was first introduced in Fresno, California, people didn't know if you were supposed to hand it to the cashier with two hands, if you were supposed to ask for it back, if they'd give it back to you. People didn't know how to use it. So why am I bringing this up? You asked about the origins of Bitwise. I think it's not uncommon that financial services and the financial system changes. It's happened many times. It's usually a 10-year or 20-year journey. Credit cards took 10, 15 years. Money market funds took 10 years. And I think that I was at Facebook before, and we saw in 2017 what Ethereum was making possible and already knew the profound possibilities of Bitcoin. And we said, this is something that's going to have a chapter in a history textbook. The world is not done in 2017. It's going to continue to advance, and new things are going to become possible, and we'd love to have a chance to play a role in that. And specifically, to be a partner to what are now our clients, which are generally smart and busy people with a lot of responsibility who want some help being successful in the space. And that's what we do through our client relationships and through creating vaults for them or staking their assets for them or building ETPs for them to use. And so that's how I'd maybe describe the origin of Bitwise.
Justin, do you want to take it away?
Yeah, I think there's some interesting similarities in the story. The two co-founders of Anchorage, Nathan and Diogo, they started as security engineers at a bunch of different companies, but at Square, and they actually, speaking of the credit card revolution, they're on the patent of the little reader that everybody uses, and they were both, you know, deep Bitcoin enthusiasts from the early days and saw this trend that was just starting at that time to towards institutional adoption, and thought there isn't anyone doing just this super well right now, and if we could, you know, see where the skate to where the puck is going, as they say, let's launch a full-on institutional custody solution, because wallets and some of the other solutions that are great for retail and that I use myself aren't necessarily going to cut it for the largest VCs, family offices, ETFs, et cetera. I don't think they necessarily predicted all of these amazing steps that have happened along the way, but I think it's that founder journey that's really cool. I think it's what many entrepreneurs want, to have grown to a 700-person company with offices globally. It's amazing to have seen all that happen. And yeah, one of the just quick things that I think I pitched Nathan on after I joined the firm was launching a ventures arm, and you know, I said, like, who gets it better than you guys who started this thing and watched it blossom? So that was one of the probably not necessarily related to BTC5, but we have written some checks to some early stage builders in the Bitcoin community, and, you know, have a bunch of smart developers and product people who are hanging out at some of these hackathons and really trying to understand the asset class on a deep level. And I think that's just another tangible way that we've, you know, as we've continued to build out the stack, as I was saying, coming from 15 years on Wall Street, mostly Morgan Stanley, saw what, you know, once you get the assets and you are the trusted partner, then you can start doing some really interesting things. That's why we built the trading business and the stablecoins business, and are building a fiat business and a whole bunch of other solutions that we hope will, you know, try to minimize the number of core partners you have to go to. So.
Yeah, Justin, I was just going to make a comment on that last part. I remember when I first joined VC in 2020, I probably saw the, I don't know, Series A or Series B decks for Bitwise and Anchorage, and they were sort of pitching this vision at the time. You know, everybody was infatuated with tokens and DeFi and stuff like that, kind of wrote those off. And now many years later, I think
You passed. We get it. You passed.
Well, you know, I was going to say many years later, everybody looks back at these as two of the most sticky businesses in all of crypto, so definitely huge. I'll turn it over to Paul.
Yeah, so I guess, you know, my story is much shorter in general. So 4 years ago, I was a student on, you know, distributed computing and consensus algorithms, and you know, got funded like $20 million by like Andreessen and others to build like this internet protocol for financing. And you know, 4 years later, after 2 free iterations of the protocol, Morpho has currently approximately $12 billion of assets and in the protocol, and is directly helping with the financing and the yield of like pretty much every single exchange you could think of. That is, you know, as you were presenting earlier, everybody's moving on chain to power their financial services, right? Because once you can provide the UX that is on par with like a Web2 experience, like a fintech experience, but you can benefit from the Web3 as the backend, like the benefits of Web3 as the backend. Well, what you get is like an open infrastructure that allows for much more efficient, much more competitive pricing, and much deeper liquidity, because it's global liquidity, right? So when you think about a product like crypto-backed loans or on-chain yield, what you actually benefit from is like a global order book that's connected everywhere. When Coinbase allows you to borrow on the back of your Bitcoin to borrow USDC, it's actually borrowing from lenders that can be on Kraken, that can be on Bitpanda, that can be on Binance, right? And this is not something that's possible without the chain. But anyway, so that, you know, for me, the journey was, you know, mostly learning pretty much everything at the same time, right? Because I had like no prior experience before Morpho. But it's been absolutely incredibly interesting. I think the openness of everything in crypto is such a rich way to learn and build in general. Like everything that we build at Morpho is like the code is open, and so it compounds at an extremely interesting pace, right? Every new integration that happens on Morpho is basically reused by another integrator to do the exact same thing, right? And so you have so many network effects in crypto and on chain in general that compound very, very fast, whether that is liquidity, whether that is code library, etc. And for me, that has been just extremely rich experience of learning, thanks to those like flywheels, basically.
Awesome. Segued right into the next topic I want to discuss, which was the on-chain space. Paul basically just gave the beautiful pitch for why on-chain is valuable at all. Hunter and Justin, maybe you guys want to talk about how you guys are thinking about integrating on-chain into your businesses.
Yeah, I think it goes back a little bit to the point I just made, where once you have this distribution network, I think a big piece of it is listening to that client demand, and no one wants to see their Bitcoin sit idly by. So it's been really great to work with Morpho. We have some really cool stuff going on with them, and Bitwise and many others where say, like, for example, the DATs, they'll come to us. We work with many of the largest players in that side, and they want to put those assets to work. They want to be more productive. And as a bank, you have to be a bit agnostic to every solution, but there's still some that we've seen battle tested. That's a reason why they're up on this stage. And we have some deep expertise between our staking leads and our protocols team for how to do this the right way. I don't think it's just the kind of thing where even when there are issues, Anchorage has been lucky enough to never experience a hack or any sort of major client loss. So I think that's what gives you the credibility that's necessary, and it's something we just are continuing to evolve every day. And that's why this full prime brokerage offering, there are financing trades available, there's derivative trades available. I think the core of it is Bitcoin is still the most requested asset, the number one across the board that we just continue to see. So again, have to support 600 plus assets at the demands of clients, but there's a lot of Bitcoin maxis at Anchorage.
What are people requesting?
Yeah, I think it comes down to some of it is choice, right? Like, they want to work with certainly, as I said, the premier providers, but you can't necessarily say you can only have access to this one narrow sleeve, because, as you said, if these worlds are colliding, and I did see it in my time at banking, where it's kind of like you could say, I'm going to try to protect some piece of the pie, and the reality is it's going to happen with or without you, right? So I think it's really just that, someone coming to us and being like, hey, someone else can do this, some smaller, more nimble provider, we're going to move some assets away. Like, well, hold on a second. Usually we have the bandwidth and the capacity to be that design partner and build something and roll out new integrations. We have many teams of engineers dedicated to this sort of thing, and I think that kind of white glove service element, and trying to just make sure that you have someone kind of quarterbacking every relationship, gathering that feedback, funneling it to all the right folks internally, and then looping in those subject matter experts where necessary. I think that's what's allowed us to be one of the first movers in this space.
Hunter, you want to talk about on-chain within the business?
I'm so excited about on-chain, and I'm also specifically extremely excited about Bitcoin Smart Accounts. So thank you to Jacob and Lombard. I mean, I think what you just said is exactly right. With our clients, I said this before, but they're smart, they have a lot of responsibility, and they're busy. So they want things like yield on their asset. They say, we're sitting on this large, $200 million of Bitcoin. We're going to stay long the Bitcoin. What are the options for how we could participate in yield? And then they want to minimize risk, and they want to do it efficiently and get it through committee, or get it through, make sure it's compatible with their auditor. And so we want to furnish solutions for doing that. I think one of the reasons that I'm so excited about Bitcoin Smart Accounts is that for many Bitcoin holders, they really want to leave the Bitcoin in their qualified custodian. But they also want the Bitcoin to be productive. And so far, it's been a choice between one of the two. And sort of recreating the tri-party agreement on-chain, I think, is unbelievably powerful. So today, we help clients participate in yield in all sorts of ways, sort of conventional ways, developing custom option strategies for them, but also new on-chain ways, staking their assets and accessing a variety of opportunities through vaults, which Paul invented. And so I'm unbelievably excited about the possibilities to make Bitcoin productive through Bitcoin smart accounts. And I think it's kind of also the chapter that we're entering. I think that the world understands Bitcoin is digital gold. Tons of people own it. More people are going to own it. They already know they're going to own it. They're just sort of biding their time and deciding when they're going to prioritize it. And I think on the builder front, everyone on stage, it's our job to get out in front of, okay, they're going to own it. How can we make it a useful, productive, high utility asset, just like every other asset? If they can borrow against their stocks, why can't they borrow against their Bitcoin? If they can earn yield through securities lending on their stocks, why can't they earn yield on their Bitcoin? It's important that that's developed thoughtfully and in a way that's actually useful to people. And I think the on-chain realm is the frontier where that's happening. And so clients are asking us to do more and more, and we're unbelievably excited.
Awesome. I love the enthusiasm you have for the on-chain space. Maybe I'd pass it to Paul and Justin if you guys want to kind of comment on the off-chain collateral piece. BSA being one of the big solutions for this. Obviously, I think this is top of mind for both of what you guys are working on.
Yeah, for sure. So I guess, as we bring in hundreds of billions of stablecoins and soon trillions, we're gonna need yield to power, is effectively demand for those stablecoins to power the yield of everybody. Like if you think about it, every single distributor, every single fintech is gonna bring their savings account on chain and is gonna bring it. Every user account is gonna become stablecoins based on self-custodial wallets that's gonna earn yield on vaults, like every single one of them. And so you need a huge borrowing demand to be able to support that yield, whether that is through, some form of repos with treasuries as collateral, tokenized treasuries as collateral, etc. But so far the yield has been supported by fully on-chain, BTC-backed loans. But that's currently 50 billion, 60 billions. It's a very, very small market compared to the multiple trillions of dollars of volume you have in the repo market, for example, that support the yield and the liquid yield of many. And so I think one of the key challenges that we have right now is how do we merge the two worlds? The constraints of the sort of more real world, off-chain world with the on-chain world. And sometimes that can mean institutional compliance or constraints, like holding your assets under custody. And how can we give those users access to the very deep and competitive liquidity that you find on chain? And I think solving this problem is going to be extremely valuable because on one end, you'll provide yields to pretty much the world, right? Like all the fintechs or the Coinbases of the world that want to offer yield on USDC and others and you're matching this with this basically all the demand side, which in this case comes in the form of institutional borrowers that need to preserve their assets under institutional custody. So,
yeah, I think, Jacob, you spoke about how a couple of the biggest former haters from the traditional finance world have now started to embrace crypto on a more holistic and credible level. And I think it'd be a bit foolish to think that they're going to go from that stance to absolutely all in on everything day one. So these other ways to give them exposure to the product, to the ecosystem, and then it's one of these worlds colliding moments when you have more traditional DeFi lenders using the same doc structure as some of the largest banks in the world who say, we know how to lend money, we know Bitcoin's a great asset. Like, how do we get involved? And then you start to get to know them. You have to build a relationship and have multiple touch points at all these organizations, because we all know there's a bunch of committees having sat on them. There's committees to set up committees half the time. So I think you do it on a face-to-face level too. You attend the banking conferences and talk to them and sit down with their investment bankers and talk about the Anchorage story and the industry story and all these things that make it look like a lot of things that they've seen before when there have been revolutions. And I think that's what we spent a lot of time doing. We're co-hosting a dinner with some of these large players, and it's going to be a great mix of folks. We're co-hosting an event with Bitwise tonight, and it's folks from S&P there, and it's folks from all different ecosystems. It's a lot of the, the people who you talk to every day, all just having conversations about what can we do next. And it's really invigorating to hear, as I went back to earlier, some of that feedback on what we should build. I think that's really, really crucial to sit in this seat and of course, hopefully come with a proposed vision of here's what we're seeing, here's why these things are off-chain, here's why we think for some it might be a better fit. Like you can't always talk completely your own book. To a degree, you have to present the pros and cons of all the solutions, and I think we learn a lot in those conversations too. And yeah, I would say that while the number of these tri-party arrangements is increasing, it's usually not the only piece of the conversation that you're having. And sometimes Anchorage becomes clients of them, and we have fiat accounts and ways that we can do business, and more of those collaborations, I think, are just a sign of a healthy and growing ecosystem.
Yeah, Justin, maybe we can start with you again. What are institutions asking you to build? Like, what's been the focus? And I feel like a question like this comes up on almost every panel at this point. I'm sure you're no stranger to it. But what kind of interesting stuff, or what sort of non-obvious things might be in those conversations? I mean, everybody on this stage, I think, is in conversations with some of the biggest institutions here, week in, week out.
Yeah, I mean, just to reiterate, one of the coolest that you can tell almost when you do an announcement by the deluge of feedback that you get, what is really resonating. It's almost immediate. So when we did some of these what we're calling DeFi out of the bank initiatives, there was just an insane amount of client and prospect outreach saying, how can I be a curator? How can I be a part of this? How can I be partake in some of that yield that's being generated? So that has certainly been a theme. Again, this need for as these worlds collide, stable coins, and Anchorage has a whole stable coins issuance business and stablecoin solutions for bank business, where we're working with a variety of international banks who want exposure just to the entire American economy. And now that so much Bitcoin related is being built on shore, another fantastic intersection. That's been a huge amount. Some of these more crypto native folks haven't had the ability to earn interest on their cash. I think that's a valuable piece of the puzzle. No one, there's still a cash component to a lot of these businesses. So I think that's something we've seen quite a bit. Going back to some of the other, at the end of the day, if you really want to position yourself as an infrastructure company, a lot of what you're selling is technology and operations. And, Anchorage, that is not all we're doing, but it's core to it. And we have this settlement network we've built called Atlas that is essentially, I think of it almost like a CLS for crypto. And it has allowed a lot of these institutions, market makers, exchanges, where there has been some of that downstream risk. I've learned that they're trying to eliminate all kinds of risk, not just the risk on yield from losing Bitcoin, right? So since you made it an open-ended question, we did an announcement about Atlas and some of the partnerships and more of a detailed walkthrough on what the capabilities of the product are. And it was just, it had already been live. It's processing billions of dollars of crypto worth of volume, but that's something I think I wouldn't have necessarily anticipated. That I've been, it shows you how you have to really, really work hard to put all the pieces together. And if you can, again, create this sort of walled garden of Anchorage, and yes, we realize we will have to interact. Most of the largest players aren't going to be sole custodied for absolutely everything that they're doing. So you have to create those connections while still hopefully being the first call for everything that they're looking to do.
Definitely. I have another question on that, but I'll give Hunter and Paul a chance.
Yeah. What institutions are asking about right now?
Yeah, exactly. Yeah, like what in these conversations with institutions, what are they asking you to build? Anything non-obvious that is coming up in these conversations?
Yeah, there's some stuff that'll be boring to all of you. So in the last 6 months, 4 banks that have wealth divisions managing over $1 trillion approved access to crypto through Bitwise ETPs for their wealth managers to put in client portfolios. That's probably not a super novel thing. To me, it's remarkable. We've been around for 8 years. It's now happening. I would say, in fact, that this year is probably the most sort of substantive and bullish year that I've seen in 8 years. So there's stuff like that. Then there's more novel stuff. We have a bank client that wants us to build a vault solution for them, a bank client. I would say, in general, a lot of the institutional clients want to talk about vaults. Credit again to Paul and Morpho on creating that new construct. We have crypto platforms and neobanks and fintechs that want our staking solutions. Staking hype has been popular recently. Large Bitcoin holders have been interested in accessing yield on their Bitcoin, which is one of the reasons I'm so excited about Bitcoin Smart Accounts. And we have a solution where they keep their Bitcoin in qualified custody with Anchorage or others, and then we run an option strategy on top that generates 4 to 7% yield. They don't have to move the Bitcoin. That has been very popular. Last year we took in $3 billion of assets amidst the market being down. This year already we've taken in close to $1 billion. So we're seeing a ton of interest across many different dimensions of the opportunity set. And I think in general, one of the things that the space needs to do in this moment, I think everyone in crypto would agree that the aspiration is that Bitcoin and this space get adopted and become part of the way the financial system updates for the 21st century and the internet. For that to happen, for anything to be mainstream, it has to become simpler, easier, safer. When you buy your MacBook, you don't have to spend time thinking about the L2 cache on the motherboard or worrying about whether the spinning disk will fall off its axle. And so, we're just working really hard to help make it more of an investment decision for clients than a crazy science project. And something that you said also, which is having to interact with fewer and fewer counterparties and systems, which is a huge barrier for people when they have to do that. So maybe I touched on a few different dimensions there. But Bitcoin is the biggest story, the biggest asset, and the most interesting thing in crypto. And yield, I would say, is the most interesting thing that Bitcoin holders want to access, as well as borrow.
Well, I guess on my end, from the DeFi perspective, what we realized that institutions cared the most about is essentially two things: is control and network. So by control, I mean like the early days of DeFi, protocols tended to be managed, right? Like so the the so-called DeFi DAOs would like effectively manage funds for users, and they would vote on like risk parameters and everything. And when you talk to like a bank or a large asset manager, well, very obviously they don't want to rely on like a so-called DAO to manage their assets. They're asset managers, right? So they know how to manage assets, right? And so really, like the last 2 years for decentralized finance has been about, hey, thinking about externalizing the management component and giving the tools for the institutions to control exactly what is going to be their exposure, what is going to be their compliance, what is going to be their risk, like etc. And transforming DeFi into not being decentralized brokers, but instead being off-the-shelf stack that anyone can deploy and configure where they are controlling everything. So that's the first part of the value proposition. The second part of the value proposition is that once you own, say, a vault or a borrowing product that you configured exactly the way you want it for your clients, respecting your local, jurisdiction compliance, like the specific risk guardrails you have in mind. The second thing is like, hey, now I can access a global network of liquidity. And that comes back to the argument I was making at the beginning is like the whole point of moving on-chain is to be global, right? And when you're global, you basically, and you're when you're on an infrastructure that is open, you basically have two major benefits. Competition for pricing and liquidity, and the second is discoverability, right? So very naturally, we'll see more products being emerging because it's much easier to underwrite them because you can discover them much more easily because everything is standardized. But also you'll have more intense competition and a better expression of the free market on chain because more people are able to see the opportunity and hence give it the fairest price, right? And so as a result, for the end user, you're gonna happen to have like a service that is like has the same level of trust and confidence that you would have in TradFi today because we give them all the necessary controls that they needed to operate the services the way they do very well in TradFi today. But on top of that, you have as a user more value that flows back to you, right? And I think the whole point of blockchains is general is like how can we push value towards the edges of the network, toward the consumer, for them to benefit, from stronger financial services overall that will be like better for them and a wider diversity of products as well.
Awesome. And maybe one thing I want to shift gears back to, or this was going to be a question for Paul and Hunter around, Morpho has become this primitive within DeFi, and then people are building businesses on top of this. I think this is one of the coolest things happening in all of the on-chain financial ecosystem. You have people making millions and millions of dollars building on top of Morpho. Bitwise being one of those folks who's building on top, and then Justin, maybe you might be able to comment on this as well, because I was thinking, Anchorage's sort of evolution as a core agent for tri-party and off-exchange settlement, so it looks very similar to Anchorage as a primitive. So Paul, maybe if you want to start us off by just talking about the kind of evolution there, and then Hunter obviously would be curious to hear your why you guys decided to build on Morpho and what that business looks like, and then pass to Justin.
Yeah, so I guess for us, it was really the evolution I was talking about. Is like moving, DeFi had to move from B2C, like directly interfacing with like the so-called DeFi users of like 2017 to 2022, which was really frankly individual users that had their self-custodial wallets and wanted to do stuff, right? And so the role of DeFi at the time was like doing the full financial product for them and manage the entire financial product for them. And so the metamorphosis that we had to go through is moving from like an infrastructure where we allow businesses to be built on top. And so I think, as Morpho, we move from B2C to B2B as a company, and we don't interface with users directly at all. We just so we do have like an Explorer front end where you can explore all the, we literally have thousands of markets and thousands of vaults now on Morpho across like 38 different chains. I don't know how many stable coins, how many assets, like extremely, extremely diverse. But we don't see our role into providing an app, for example, for users, a mobile app for them to interact. Like there's like in between mostly two layers, the distributor, which would be like typically a fintech or like, your traditional like banking interface. And then you have an asset managers. And this is, in the case of yield and lending, I really see three very clear layers, which is the distributor, the asset manager, and the lending network, like the marketplace that basically the lending marketplace connects you with the entirety of the demand side. The asset manager is going to basically configure according to the distributor's requirements, the risk and the liquidity and the yield profile. And then the distributor is in charge of like providing a delightful experience for users to basically save and manage their financial lives. So yeah, I think DeFi is, and just like crypto in general, is mostly an infrastructure play. The only product play for crypto is either on the Bitcoin side, like basically like savings and store of value, and there's obviously the speculation side, which we're all probably less interested in.
I just have to say I'm so excited. But Paul said this thing about democratizing yield markets and lending markets. If any of you have a mortgage on your home, you may remember the experience of looking for the right mortgage, and there you experienced the sort of current state of accessing borrow, which is you go through these intermediaries, you're not really sure where the pricing's coming from, you're not sure if you're getting the best pricing. And one of the things that's so exciting about DeFi in general and Morpho is there's a future where you'll go to Morpho and $1 trillion of stablecoins will bid to be the one who gets to lend you money to buy a home. And that's going to be efficient and competitive and deeply liquid versus the way that a lot of lending and credit markets work today, which I think is just an unbelievably exciting vision. For Bitwise, in terms of getting into curation, I guess I'd zoom out a little bit and I'd say the world of asset management, people often think of the strategy dimension, which is it's an S&P 500 exposure, or it's a fixed income exposure, or it's an active exposure. Less often are they discussing the delivery vehicle, but the delivery vehicles have changed many times. Many years ago, before the 70s, it was mostly delivered through a stockbroker that you spoke with on the phone who had ideas for you and then placed an order in a brokerage account. Then it moved to the mutual fund, where you actually just delegated your money to an investment manager who could act with discretion. Then in 1993, SPY launched and pioneered the idea of an ETF, which again pooled the money but allowed you to trade it day in and day out. I think that vaults are the next evolution in this sort of history of vehicles, and are going to step forward in allowing you to access a strategy with the added benefit of transparency, possession of your assets, 24/7 interoperability. So I think it's very natural for Bitwise. Our job is to furnish access to investment strategies and opportunities, agnostic of vehicle. Today we manage 2 different types of ETFs in the US. We manage ETPs in Europe. We manage private funds, hedge funds. We manage separate accounts. We manage staking validators in data centers, and there are now very compelling yield opportunities that can be best delivered through the construct of Vault, which I think in 2 years everyone in ETF land is going to be obsessed with vaults, and is just a really natural evolution of a new format for delivering investment objectives.
Yeah, those were 2 amazing answers. I don't necessarily have too much to add. I had a question for Jacob. Is the term DeFi mullet trademarked, or am I able to steal that in future conversations?
I think you can steal it, though. Honestly, Paul did a whole. I mean, Paul's probably halfway to blame for popularizing that. So I don't know. Maybe you'd have to ask him.
No, we did not protect that, but we do have, a hairdresser's booth at conferences where you could actually get a mullet if you wanted to. Represents like the aspiration, but yeah.
Okay, that's tier 1 marketing for sure, for sure. Yeah, I do think. Yeah, I do really agree with everything that was just said, and I feel like, yeah, we're just at this interesting precipice where every day, the asset class I grew up in, FX, saw some of these same changes happen, where first some of this execution was just done in very opaque order books, and essentially everything continues to get more and more regulated as any market matures, and things like ETFs, things like building DeFi in the construct of a regulated bank is really the only way forward, because eventually as different bills and market structure things come into focus, we've already seen this year that start to happen, and continue to expect that. I think that's where you need to just ensure that that you're ahead of the curve. We have a lot of people in Washington, D.C. focused on policy, meeting with every regulator, and I think those are the important conversations to be in the room for. Nathan sits down with senators and banking committee heads and tells them about our plans and where we see this going. We're not just implementing things and the OCC hears about it afterwards. So I think that's also helped us, and will continue. I'm sure both of yourselves have some of those ties, and yeah, I think that's the next linchpin.
Can I add to that for a second? So I think in talking about where we are in the journey of crypto, there's the need to be able to access opportunities on chain. There's the need to be able to make your asset, Bitcoin, productive in the same way that your U.S. large cap stocks are productive through securities lending and borrowing. I think the other thing that crypto needs to deliver now is it needs to stop losing people's money. So that needs to end. And it's a reason that a lot of people work with Bitwise, and Anchorage, I think, is at the forefront of nobody's going to participate in this space if the space continues to carry the risk of your money disappearing. And so that's sort of like a absolute bright line and necessary precondition for any of this stuff. So the work that Anchorage does and a number of others is super important. And I think, again, it's a reason that I really mean it when I say I'm excited about Bitcoin smart accounts, because no investor or allocator of capital needs to participate in crypto. They don't have to. They will because they think it's sensible for their clients or for the money that they're stewarding. But if they think that their money is going to disappear, it's not happening. And the most confident and trusted way for them to reduce that risk is to work with an exceptional institution like Anchorage, to work with regulated products. And I think the Bitcoin Smart Account is sort of the first time that they can feel like they can tap into the on-chain opportunities without giving up that unbelievably important dimension, which is that their money can't disappear.
Couldn't have said it better myself. Three of the smoothest talking guys, I think, in all of crypto on stage here today. I think we're running out of time, so maybe just last question will be to wrap it up. Tell us what's ahead for Morpho, Bitwise, and Anchorage.
So in Morpho's hands, we've been focused the last year and a half around 2 things: unlocking fixed rate for lending and borrowing, which I think is very important for institutions in general. DeFi has been running on variable rates for the last 8 years, and when we talk to large institutions, they don't comprehend that this is we've been possibly living for so long with variable rates, and so fixed rate has been a big focus. And the second one is credit, like how can we bring effectively under collateralized loans or collateralized in different manners in Morpho lands. And I think that echoes back to what you were saying. I think the way you should think about Morpho's network in general is you come to the network with why you should be trusted, and that can be a Bitcoin collateral, that can be RWA collateral, but that can also be just an identity, a reputation, like something that gives confidence for the lender to underwrite you. And the Morpho network is about connecting you with people that believe in you, right, and that trust this assumption that that is being made about yourself, right? And I think when I think about Morpho, it's like literally this idea of like letting people express why they should be trusted and connecting them with people that believe them. And because this is all done in the open, the ultimate goal and my aspiration in like what I'm building with Morpho is that ultimately we can collapse the cost of trusting each other, right? Because it's going to be so easy to be trusted by anyone, anywhere, like around the world through this like global connectivity. So yeah, that's what I'll be focusing on.
People ask me about sort of where we want Bitwise to be in 5 years, and I think the thing I'd say is that Bitwise is 200 people today, and they all could be working somewhere else that's easier and more lucrative probably. And we choose to be a Bitwise because we believe that the world is not done in 2026, and we want to see the things that we're discussing today take shape and be adopted and be successful. And so, and then we're motivated. Just doesn't have to be the case for every company, but for us, we love the opportunity to feel useful to clients. So my hope is that the things we've discussed today are flourishing, and that we have an opportunity to work with more clients and have them feel like, gosh, we love working with Bitwise. They made that a lot easier and made me very successful at my job. And so I give some examples of the many forms that takes, but I hope to see more of those two things.
All right. I would say there's definitely an element more of putting your money where your mouth is. We've tried to put more skin in the game at Anchorage through a variety of ways, whether it's investing in protocols, investing in a bunch of technology, a public announcement that just came out. We hold Stretch on our balance sheet, which I think is just a real tangible show of support for Bitcoin, and have had a long-standing relationship with Strategy and many others who needed some of those same services. And I think the next wave that's starting to really come in is actually more some of this big tech, fintech space. That's where I'd see some of the next evolution. Some of the public announcements have come out that Meta's back in the stablecoin game. There's a bunch of all those Silicon Valley players and other visionaries who I think are also starting to turn to crypto in a more tangible way. Still somewhat in the exploratory phases for sure, but that's some trend that I do see on the horizon, and would probably be a panel at a future DOS, I would guess.
Awesome. I'm glad you mentioned Stretch. I was going to ask you about that. Well, cool. I think that just about wraps it up. So thanks, everyone.